Okay, so get ready to dive into a world where fortunes are made like that, overnight. We're talking cutting-edge tech, mind-bending concepts, and rules that seem to be changing by the minute.
Sounds about right.
That's right, we're talking crypto and the regulatory roller coaster ride that's going on, especially here in the US. You want to understand how this whole thing affects you as an investor.
Yeah.
Well, you've come to the right place.
It's definitely a fascinating time to be keeping an eye on everything crypto. We're seeing this global shift where governments are moving from kind of like a wait and see to we need to figure this whole thing out and fast.
Yeah, and nowhere is that more obvious than in the US. There's this definite feeling of buckle up coming from the government, especially when it comes to regulation. Like they suddenly heard Wild West one too many times and thought, okay, time for a little law and order.
It's a pretty good analogy. What's really kind of at the heart of it, though, is this desire to protect investors. We've all seen the headlines about, scams and fraud in the crypto world.
Yeah.
Regulators really want to prevent that.
Yeah, makes sense. I mean, nobody wants to put their money into something only to realize it's built on, like, hopes and dreams and nothing else. But it's not just about protecting, like, everyday investors.
Oh, absolutely not. Market manipulation is another huge concern. Regulators, agencies like the SEC.
The Securities and Exchange Commission?
Right, and the CFTC.
And that's the...
Commodity Futures Trading Commission.
Okay.
They're laser focused on bringing more transparency to the crypto market as a whole.
So it's about making sure everybody's playing by the same rules. Speaking of rules, what's the deal with the SEC arguing that a lot of these cryptocurrencies, they should actually be classified as securities? That feels like a pretty big deal.
It's potentially huge. Because if you classify a cryptocurrency as a security, suddenly it's subject to this whole other set of regulations designed for traditional investments, like stocks and bonds.
Oh.
We're talking registration, investor disclosures, the whole 9 yards.
Wow. So for some of these crypto projects, that could be a pretty big hurdle to overcome. It's like they signed up for a friendly race and all of a sudden someone threw in a bunch of obstacles. What does this mean for investors, though? People who might be holding some of these cryptocurrencies that are now, like, under the microscope.
Yeah, and that's where things get really interesting.
Okay.
And potentially tricky for the average investor. This is a situation that's still developing, and a lot depends on how these regulations are actually implemented.
Sounds like knowledge is going to be critical for anyone who's either invested or thinking about investing in this whole world.
Absolutely.
You don't want anyone to feel like they just wandered into the wrong saloon, right?
Exactly. And it's not just a U.S. thing either. The European Union, they're developing their own framework known as MiCA.
MiCA.
Yeah, it stands for Markets in Crypto Assets. Basically, it aims to harmonize regulations across all of the EU member states. That could have ripple effects on crypto markets globally.
Okay, so even if the U.S. tracks down, the crypto world will, like, find a way.
It's definitely possible. Crypto, by its very nature, it's borderless. So while regulations are coming, it remains to be seen whether there'll be enough to totally change that decentralized spirit of crypto.
Okay, so we've got the U.S. tightening the reins a little bit, the EU building its own fence, but let's bring it back down to earth for a sec. What's the real world impact of all this on, like our listeners, individual investors?
On one hand, all these regulatory changes, they could actually make the crypto market safer.
Oh, okay. That's good to hear. I was starting to think we needed to, like, invest in a digital sheriff's badge or something, but how would that actually work?
Well, think about it. If regulators are successful in getting rid of scams and manipulation, that just naturally makes the market less risky for everybody, especially those individual investors who might not have the same resources as, say, institutional investors.
Okay, so less chance of getting caught in a crypto scam, which is good for everyone, but I'm guessing there are two sides to this coin, right?
Yeah, there are always two sides to every coin, especially in this world. While more regulation can mean a safer market, it could also mean fewer investment options. Like, imagine some smaller crypto projects that maybe just don't have the resources to navigate all these new rules.
So a barrier to entry, basically.
Yeah, exactly. Yeah. And for people who are investing, this could mean fewer opportunities to get in early on, something new, something potentially big.
Makes sense. It's like a trade-off. More security, yeah, but less freedom to maybe find those hidden gems.
Right.
And of course, there's always taxes. Seems like that's one thing from the Wild West we can't escape, even in the digital age.
Definitely. The IRS is paying very close attention to cryptocurrency, and to them, it's considered property for tax purposes.
Oh, okay.
So that means capital gains taxes apply if you sell it, trade it, even use it to buy stuff.
So no more buying pizza with Bitcoin and hoping the tax man doesn't notice.
Not really.
Yeah.
The IRS wants everyone to understand those tax implications.
Yeah.
Good record keeping is going to be really important.
Got it. A digital paper trail for our digital dollars.
Basically,
Okay, but speaking of navigating this whole new world, there's another layer we got to talk about. Stable coins and CBDCs.
right.
These are really changing the game. Before we get into all the regulations around them, though, can you just give us like a quick explanation of what they are?
Sure. So let's start with stablecoins. Imagine you've got a bridge between the crazy world of cryptocurrency with all the ups and downs, and then the stability of something like the US dollar. That's basically what a stablecoin is trying to be.
So less of a roller coaster ride than something like Bitcoin, which I'm guessing appeals to a lot of people. But I'm sure that stability comes with its own set of questions, especially when regulators get involved.
Exactly. Stablecoins are definitely being watched very closely, especially here in the US. Regulators are worried about the risks they could bring to the entire financial system if they get too big, without anyone really keeping an eye on things.
So potentially more regulation coming for stablecoins.
Most likely. There are already discussions happening about stricter rules for the reserves that back these stablecoins. And there's a good chance they'll eventually have to follow similar rules as traditional financial institutions.
That's a lot to take in. Okay, so we've got stablecoins trying to bridge that gap between traditional money and digital currencies. But then we've also got CBDCs.
Yeah.
These are government-issued digital currencies, right? Seems like adding another layer of complexity to everything.
It definitely adds another layer. CBDCs are basically like digital versions of the cash we use every day, except they're issued by a country's central bank. So instead of the Federal Reserve printing actual dollar bills, they'd be issuing digital dollars.
So a digital dollar, but still backed by the U.S. government. It seems like that could completely change how we think about money and how we use it. But where do these CBDCs fit into this whole crypto world? Are they on the same team?
That's the big question, and there's no easy answer. Some people think CBDCs could actually make digital currencies more mainstream.
So more people would trust them if the government's involved.
Exactly. That could lead to more investment from bigger institutions and more user-friendly ways for everyday people to use them. But, and you knew there was a but coming, there are also concerns that CBDCs might become competition for the cryptocurrencies that are already out there.
A real clash of the titans. So what would be the downsides for the average investor?
Well, one big concern is control and privacy. Since CBDCs are centralized, that means governments could potentially see a lot more of what people are doing with their money.
That's a big deal, especially for anyone who, really values that privacy and that kind of free-flowing nature of crypto. It seems like we're headed for this face-off between governments and that whole decentralized idea of crypto. So what happens next? Can these two worlds even exist together?
It's a tough question to answer, that's for sure. Like, who knows what the future holds, right? But if we look at the big picture, I think it's safe to say that regulation is going to stick around and it's going to reshape the whole crypto world as we know it.
So no more Wild West. Time to settle down.
Something like that. Now, whether that's a good thing or a bad thing depends on, well, who you ask. Some people will say it's going to stifle all the new ideas and innovation. Others will say it was necessary for crypto to really take off.
So a bit of no pain, no gain then.
Yeah, exactly. Think about it. Right now, one of the biggest things holding people back from really getting into crypto is that lack of trust. There's fear there, right? Fear of scams, that volatility, just not knowing what's going to happen. But more regulation, as long as it's done right and doesn't kill the creativity that makes crypto so interesting, it could actually make people feel safer, make the whole thing more appealing to everyday people.
So less risk, more stability, but maybe at the cost of some of that, like early adopter thrill. What does all this mean for the average investor, though?
Well, for one, it means staying informed. Keep your finger on the pulse of all these regulations, both here in the US and around the world. And diversification is key, too. Don't put all your eggs in one basket, especially in a market like crypto.
That's good advice for pretty much everything, right? Don't bet it all on one hand.
Exactly. And as always, only invest what you can afford to lose. That's rule number one, no matter what's happening with regulations.
Words to live by. This has been a wild ride, and it feels like this is just the beginning of the crypto story. Any parting thoughts for our listeners as they try to navigate all of this? What's the one thing you really want them to take away?
Here's something to think about. In this new world, this more regulated world of crypto, what role do you want to play? Are you okay just watching from the sidelines as things change? Or do you want to jump in, learn everything you can, explore the possibilities, maybe even be a part of shaping the future of how we think about money? The choice is yours.
I love that. Such a great point to end on. A huge thank you to you, our crypto expert, for taking us on this deep dive. And to our listeners, thanks for sticking with us. We'll be back next time with another deep dive into a topic that's changing the world around us.